Hey guys, it's Greg. In the last video, I went over this article. Wanted to show you guys some evidence on how when quantitative tightening happens, it does not mean that the stock market and assets are going to continue to go down. I proved that to you right here. This is a good article. The Fed doesn't rule the stock market. Went into here to show you when it was doing quantitative tightening, and I showed you the dates on Bitcoin when they started quantitative tightening in November 2015 and how Bitcoin did a moonshot, did come over here to do a correction. So let's talk about that. All right, guys, it's Greg. Have I proven my case yet? That if the Fed does quantitative tightening, actually assets can go up? I think that I have. So let's go on to the Bitcoin chart. We're going to just stick with the Bitcoin chart today. I was on YouTube last night watching some YouTube videos, and these guys are just digging into the Bitcoin chart, trying to find answers. And it can be difficult. I agree with that. Becoming a chartist or whatever you want to call a chartist, analyst or anything like that can be very difficult because it's just all a guessing game. You can't predict the futures. But what you can do is go off the data, and usually past data and charts is kind of related to the data into the future. As you can see with just, these same type of waves through this chart. It's just, you can see with Bitcoin here over time, the momentum is slowing down. See more momentum here, and the momentum is starting to slow down. Okay. And as time goes on, that's going to happen with Bitcoin. Bitcoin is most likely not going to do any more moonshots like this, guys. Those days are over. That was the beginning or infancy or genesis of the asset. And it's going to continue to go up and to the right, in my opinion, for a long time to come. It's just not going to be as aggressive as these over here. As you can see, if I put this a 4-wave count right here, guys, like this, okay, and there, you can see this is another wave, and it's just not nearly as aggressive. This wave here is not going to be as much as this wave here, this last 5th wave. So just to show you that. Now, here's some things I've been going over, and I showed you. Here's quantitative tightening started for the Fed here in November 2015, and Bitcoin did do a moonshot. And this is my opinion on what is going to be going on in the markets here with Bitcoin. And it's going to come down to complete a correction. It's going to do a shot up to a minimum of about 70,000, 74,000. And then there's a potential high mark of up there to 169,000. It's the middle of the trend line. I have my trend, this trend channel a little bit different. It's not at the top of here, and I'll explain to you guys why in just a second. But let's take a look at the correction and just go off some basic data using, as far as a long term, using these waves as your data points, or Elliott waves. Okay, so if this is wave 1, 2, and this went up for the 3 ended there, and then coming down for a 4th wave. Normally, if you take a look at just data, I'm going to go here to, this is Elliott wave ratios for a wave 4. Wave 4, it says wave 4 is related to wave 3 by one of the following. Wave 4 equals either 24% of wave 3 or 38% of wave 3 or 50% of wave 3. The 24% and 38% are the most common ratios for wave 4. As you can see right there, you guys can go look and check that data. This is data, excuse me, this is data that has gone back for over 100 years of studying these waves. I think beyond the 30s, the 1930s. So these ratios are they're backed up by a lot of data, is what I'm saying. A lot of data, guys. So here's the wave 3. Okay, the end of wave 3 is right there at this point. Okay, and no, the peak of end of wave 3 would have been right in that area. So let's take a look at a retracement of that whole wave. We stick it right about there. As you can see right now, just based off the data, it just breached the 24, this would be the 24% on the Fibonacci levels that article was talking about. So here's your 23.236, 0.238, some people use 0.238, or generally speaking, about 24%. Now, what do assets like to do? Assets do like to go to these Fibonacci levels. And what Fibonacci numbers are. They're numbers from nature. These are just, this is not something that was just, oh, let's make up something. They're numbers from nature, how people's faces are formed, how flowers are formed and everything. And they have Fibonacci ratios in them. So, and the reason you have Fibonacci levels and ratios in these assets is because this comes from people's buying and selling or their behavior. That's why they end up with this. So that's already breached this. So there's a higher probability, since there's already a breach of this Fibonacci area, then the next probability is going to be the 0.382. Okay, can it go down to 50%? Yes, it can. It's right on top of that wave. Okay, but this is an area that I think that it's possibly going to go to. It's just going to take some time in this wave forward to get down there. Now, what's also interesting about that, I have a line on it, and I've gone over this before, is that it's going to come down to this area and right at the lower end of this channel too. And then a lot of people use the 200 week moving average is passing right through there. So more than likely, in my opinion, until we get there, you don't really have anything to worry about. If you've been following this channel, you should understand that you should be in cash, USDC, stacking your cash and getting ready for the bottom to come in. And then you can start, either if you want to take the risk, buy the dip, which you could. Just remember there's downside risk to that possibly, or you could wait for a wave and then pick it up on a correction. It just depends on your your risk tolerance in that instance. So I'm going to go ahead and turn off the 200 weekly moving average right there. So after it gets there, and in my opinion, is that there's going to be an upswing and Bitcoin is going to complete this wave. Where is that going to go? Nobody knows. But I have a minimum target of right around 70 to 74,000 or something like that. Now, I have this channel on here too, and I did some research into the channels. These are called Elliott wave channels. And a lot of people I've been noticing have been taking that channel and using the top of that wave there. And I just don't think that's correct. But right now we have, when you connect your channels, you use either the bottom of what would be the wave 2 and the bottom of the wave 4. We don't have the bottom of the wave 4 yet, but you can use the top of wave 1 and the top of wave 3. Okay, so it's either there or there. Now you can use that. Now the top of the wave 1, if you go to the top of the wave 1, it's going to be a more conservative estimate, because what you can do with these channels, and these channels, people, there's traders that do trade these channels. So in this instance, you can use this down to this 2, and then the 3 would be like right here, and they'd be expecting the 4 to come here, and then a 5 ending at the top of that channel. Bitcoin does respect that channel. So that's another way you can get a target. As you can see, that's way up there, 136,000 plus on Bitcoin. So, and you can use it. Now, some people will go more aggressive and go all the way up. But, I don't think in this instance you want to be aggressive with Bitcoin and go all the way up. I think you want to use the lower end of it and get a more reasonable area of a target to go to. So here's what's also I find interesting is that with my Fibonacci ratios, the minimum target that I found was right in this area, about 74,000. And I was checking out the channel and trying to come up with a reasonable area for it to, based on this, if you want to call it guideline, if you will, is that it ended right at that halfway point, at a minimum point. So for it to have a bounce and then a minimum halfway through that channel to end right there at about $74,000. And that's what I think, guys. I still think, until proven otherwise, I think Bitcoin is going to come down, complete this correction, and go up. Now, where's the other evidence? I don't think this is too complicated, in my opinion. I just don't. I think the fourth wave is doing what it's supposed to do: frustrate people, make them mad. Frustration is just a polite way to say to piss people off. That's what it really means. So, and that's exactly what it's doing. Now, if we go through here, people are looking at this and, oh, this is the 4-year cycle, this is the 4-year cycle, and this is the 4-year cycle. In my opinion, guys, really, I think this whole 4-year cycle just happens to be coinciding with these waves. I think over a period of time, this whole 4-year cycle type thing is probably gonna die by the wayside, because I think it's gonna get out of sequence eventually. That's just my take on it. I do use the 60-day cycle. There seems to be some validity to it. However, you do have to wing it quite a bit, just like anything else in a chart. You have to wing it quite a bit to get that. But Bitcoin does go in cycles. There's no doubt about that. All tradable assets do go in cycles until they die or go away. Just looking at the RSI though, guys, coming down for a peak, people are studying this, they call this the bear market and this the bear market. And it would be, I would say, okay, yeah, it's a bear market. And they're looking at the RSI, or they're looking at data, trying to figure out, okay, what's going here and how deep is it going to go? I mean, I really think that the answer is right here in the RSI, guys. You take a look at that. The RSI on this wave at a deep correction went down to about 26, did another wave, and then this next one came down. It didn't even go as deep, down to about 20, looks like 29. And now it did that massive correction in March of 2020. That one actually hit 33. And if you take a look, I'm going to spread this, open this up for you on the RSI, guys, is that the area we have already hit is below the March of 2020 low. And I think it's a matter of the RSI swinging back up and then coming back down to take that out and then to take that out. And I don't think it's going to take that out. That's very, very low. It could, though. It could. And then come down and complete the correction. And just based off this RSI data, guys, I mean, there's no, after Bitcoin gets down here, there's no other place for the momentum to go. I mean, it's like running out of room, guys. It's just not going to, unless it's going to die as an asset. I don't think so. The probability is very low that would happen, and the probability is very high that at some point it's going to start making a move out of there, just like in these instances where it came down and then boom, started getting out of there. It came back down and this was very aggressive, boom, and then it's coming back down and then boom. It's just a matter right now, guys, have some patience. Don't fall into the trap and start getting into the early. One thing that they are telling you is, oh, we're going to a bear market. Don't be buying anything, get out of the alts. That right now is good advice. The only thing that I would be that is likely to happen is a lot of people, in my opinion, let me put this, a lot of people, in my opinion, are going to miss this move up. They're going to be told to leave the market because it's just going to go down to the depths. They're going to miss that. Just like a lot of people probably miss this too. They're told the same thing and miss that. Just like over here, a lot of people left and missed that. A lot of people left and missed that. So just to give you guys an idea, just have some patience. And once it comes down and completes its correction and goes on that uptrend, there's going to be a lot of people that are going to make a lot of money. Thanks for watching. Peace.